Hey, what's going on, guys? I'm doing an update, global macro update, end of the week update, and pretty much month end, year end. Want to wish everybody happy holidays, Merry Christmas. Probably won't be on much Monday. We'll be working on doing stuff with the business next week. So if you're around, I know a lot of you took advantage of jumping in the live room or our live trading room this week that I opened up for free, just a trial offer. I may open that up again Wednesday. There's one last day. I didn't really get to talk to any of you that were new today. It's just because we were busy trading. So I may open that up again Wednesday. And it'll probably be a slow week trading, but I think there's a lot of risk in this market. You take out the liquidity around the holidays, I think we're going to have a real mess going into the end of the year. So there's probably going to be some good opportunities. And let's just talk about what's been working. We've had this call for long dollar since April. We've had the growth slowing call since the summer, particularly August into September, and talked about being the fourth quarter a disaster. Talked about we still think it's going to be terrible for risk assets into the first quarter. And it's not about pounding our chest, but I started this company in 2000, I started this company going on 3 years ago, and I left the rates desk that I was running. Fixed income was just, guys weren't taking risk anymore. It just wasn't what it used to be. Directional risk, nobody was really prop trading. I just kind of got fed up with taking risk. I was taking more risk than a lot of the big primary dealer desks as far as directionally. They wouldn't work my orders even overnight. I couldn't get Goldman to work 10 million tens. It's just the risk appetite changed, and I wanted to cover more markets. But I've had this vision and this goal and this mission to help people really with the next downturn. I saw what happened when I started in the business at Schwab, 2007, 2008, and saw the market rolling over, and then just saw how Wall Street did a terrible job of getting people out of the market, did a terrible job of telling people to hedge. It was largely about just keeping assets and don't give advice, and largely because most of the money managers or financial advisors, even you look at the performance of a lot of these hedge funds is just terrible. So they don't do a good job, actually do a great job of blowing people up every business cycle. And so there's a really high probability that 10 years off the lows, this is it. We haven't made that call yet, but we've made the call that growth is going from great to good, maybe even to just okay, and that's still slowing, and the market's pricing that in now. So, and on top of that, you have inflation basically moving to deflation again with what's going on in oil and commodities sideways to down. So it's been a good call, and I'm pretty passionate about how you guys have not only been out of the way of this, but you're also capitalizing on it. So our first goal is to save money and help you just protect your wealth, your investments, your capital. And then the second thing we want to do is actually make money from it. So, some of you have doubled your accounts this month since November. We haven't finished the full December out yet. So I'm just really proud. I just tweeted this out. One of my guys has just sent me his statement here. He was at $5,000 last month in November. Today, this was a couple days ago, he's at almost $9,000, 9,200. And I don't show this stuff it's not about bragging. This is a tough business. Getting the market right's tough as it is, but you got to keep score, and results matter. So, listen, I think what we're trying to do here, I'm not really going to explain it, but I think let's just get into the markets. I think there's some big breaks here. Really the NASDAQ was the only thing I could see that the bulls had much to hold on to. That was the February lows that broke today. We're going to close the week below it. You can even look at Amazon. We talked when we were seeing these trillion-dollar headlines, it felt awful toppy. We put out plenty of sell signals on Apple, and we're starting to take those lows out. So I think there's room to go to 200. That's the call now. So you guys that are in the real-time alerts, you know that we were buying puts. I won't say which strikes and when, because that's kind of part of the service and the team. But these are all big picture breaks. And the thing with these markets are so computer driven. There's so many algos, quants, machines now that they were set up to buy the dip. And I'm telling you now, these are such obvious breaks, both technically and quantitatively. There's a lot of people have different models, but they're all similar as far as there's so many technicals involved in this stuff. But you're clearly breaking to lower lows. You have moving averages crossing. There's all this stuff is tied into that same methodology, and it's all breaking. So what that means is, doesn't mean we can't have bear market bounces, and we can definitely have some nasty short squeezes, but this incessant buying the dip mentality that's been going on, it's going to all start to change. It's been changing, but today, I mean, if you have a good long strategy algo computer model, you got to be either out of the market or you're switching to short. If you can short a lot of these, some of these firms have a stipulation they can only go long only. And that's the other thing I'll say. I mean, you can talk about technical breaks and draw the charts up, and there's a lot of technicians putting stuff out on Twitter, but it's another thing to get the timing right. It's another thing to work a position, execute, and at the end of the day, follow a trading plan and a methodology and process that makes you money. And so if your broker or your firm, whatever, if you were buying the dip thinking that this was a global synchronized recovery and 10 years off the low, the economy's great, and even today the Fed's still saying the same crap. If you didn't realize growth was slowing, if you haven't been bullish on bonds, if you haven't been long volatility, if you haven't been short stocks, high beta, then you got to reevaluate your process. You can make some of the best money in a down market, and I think there's a very high probability this is just the beginning based on what the market's doing on this weekly close. So we think the VIX is going a lot higher. And I would just ask you, what is your model and your process if you haven't been long this stuff or been with the stuff that's working? We have that answer for anybody that wants to join our team, or if you want to learn our model. I mean, I struggled for 5 years through a lot of bad trades, a lot of lost money, a lot of frustration, and then actually had towards the end of my career there in fixed income, I haven't had losing months. I mean, I might have break-even months, but I didn't have a single losing month for almost 5 years. I was very proud of. And now we're just doing the same in other markets. So Forex, commodities, we're just trading anything that moves. So that's kind of what we're about. I'm trying to help new traders that are new to the markets. And then obviously we have seasoned professionals also. It's the same. It's all the same stuff. So JenkinsRM.com, under our trading services, these first two columns here, this is basically our membership. So a lot of people pay good money to be a member at a golf course or a yacht club, or pick your membership, and that stuff's all fine. I'm just saying this is a membership that actually makes money, that help you protect your money first of all, and then actually help you make money, whether it's part-time or you want to do this full-time. So we have a real-time alerts product, less than the cost of cable. I'm sending out half a dozen trade alerts to your desktop, to your phone. So if you got a part-time job, if you're only doing this swing trade, longer term, you're still going to see the edges and what moves we're making and where the model's spitting out directionally what we think the right moves are. And then we have a live trading room. It's only $100 more, and we're on every day. So this is what I've been inviting people into this week. I mean, you guys see it. I'm teaching in there. We're talking markets, psychology of trading. We're analyzing markets. You see me take real risk in real time. I'm working with my traders. And then these are a couple of courses I have. This is our directional model. I throw in the options, how we trade options on top of the model for $500 more. And then I have a coaching and mentorship program. This is the best value. This gets you the live room, it gets you the course, and you work with me individually in a group setting where we work on, hey, what are you doing right? What are you doing wrong? Every trader is different. It's just a matter of cleaning up your bad habits and then doing the right action on a consistent basis and sticking to the process. So that's kind of me. That's what I do. This is what we're about. trying to pack all this into a video here before everybody gets into the holidays. So we know what's breaking in the Nasdaq now. The Russell was the first to break. That's the futures. If we look at the index, started to break what we call the bands here in November. Small cap always leads the rally when the growth is accelerating, and small cap always is the first to get crushed when growth slows. You can see Russell's already through the 200. We're going to get this test of pi. Now, this is what I think the rest of the markets are going to do. You're going to put SPX or SPY right next to it. Here's the weekly, broke the bands. I think you're going to test pi in probably short order, honestly. When, up the stairs, out the window, when risk is on, coming into a light holiday week, we could be there next week. This is when things start to crash, when you break the weeklies. So, huge amount of risk out there in the equities. We look at Dow futures, broke the bands, can easily go back to the 200 and or pi. Which one am I missing? We did the Nasdaq. Finally broke today on the weekly level. It really broke the bands, but today was when we snapped the February lows. So same thing. I think you're gonna go to 200, maybe get as deep as pi. We still think coming in the first quarter is gonna be more of the same. Growth slowing, inflation's come way down. Bond yields have priced that in. Yields down, bonds up. You can chase the Fed all day long if you want, but they're always looking in the rearview mirror. They're going to raise into a slowdown, just like they always get it wrong. The market's been pricing this whole move in the bond market, so we've been bullish bonds. Again, coming back here, October, November. I mean, look at all the trades we've done. Everything's on the long side. It's been a huge 2 months for us in bonds. Like gold, I'm not as bullish gold as in bullish the dollar and treasuries, but it's gone bullish now. It trades a little bit as a safe haven. We've liked being long gold against our dollar longs. That's a great pairs trade. Speaking of the dollar, euro, we had nice trades this week. He said the top of the range is close to 115 after covering a lot of shorts and 112 handle. And then here we have another bearish engulfing. We failed right at the bands. Congratulations to everybody that made sales there in the euro. It's been a pretty good week. Here was our trade today. Sold some stuff into the spike, and then we added to it day trade cover. It's still a little bit short. I think that's enough for the video, guys. Again, happy holidays, Merry Christmas. I'll talk to some of you next week. But good stuff out there. I hope a lot of you come join us. It's free to come into our chat. Our chat room's right here. It'll pop you if you go through this process. Just takes a second to sign up. It'll put you in the trading floor. We're talking all markets. I have that real-time alerts product, which gets you equities, bonds, forex, commodities, crypto alerts. I did 4,500 today in futures across these global macro markets. So it's good stuff. Look forward to seeing a lot of you in there. I'll probably run a couple specials next week. So, I'm spending time with my guys, my traders, my gals. We're busy in the markets. So if this is something you're interested in, you got to come in here, show some initiative, message me. Let me know where you're at, what you're thinking, and I might run some small discounts into the end of the year. But you got to message me and let me know. All right, guys, have a great weekend.